This is a study that I've been doing, and then I decided to share it with people because I think it's so important. That's important for every individual, for every company, for every organization, and for every government. The future will be very different than your past. You start a new world order. It is really concerning. Many things never happened in my lifetime before, but they happened many times before in history. And that if I would go back in history, I could see that. The first time that happened was in 1971. Richard Nixon gets in front of the camera.
Good evening, my fellow Americans.
And says, we're not going to give you the gold, and devalues the dollar.
We must protect the position of the American dollar as a pillar of monetary stability around the world. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
And I walked on the floor of the stock exchange, and the stock market was up 4%, which was the most in a couple of decades. And I said, wow, that's surprising. And then I found out that Roosevelt did the exact same thing on March 5th, 1933. And what was done in those two times is the same thing that was done on April 9th of this year, when the federal government and the Federal Reserve decided to produce a lot more money and credit.
Just getting word from the Federal Reserve.
Bombshell announcement from the Federal Reserve.
It is an absolutely historic week, both in terms of the speed of Fed purchases.
And so we're in a new era of monetary policy 3, as I call it. Monetary policy 3 will mean that the free market will play a much less role, that the government, as we come into the future, will be thinking, how do I get that money to those who need it the most? So it'll be a highly political decision. So monetary policy 3 means there's that type of cooperation. So those are the two dimensions of big change environment. You're going to see much more government influence and direction of where money goes, which will have a big impact on not only the economy, but of markets. You have to watch what they're going to spend their money on. And it also means that there'll be much more debt that is monetized. And that has implications for the value of financial assets. It has implications for the value of the currencies and so on. So when we're looking at this, we're going to also see, I think, the rise of the increased importance of China's renminbi as a currency. It's got a long way to go before it's going to be a reserve currency. But I think that one of the important things to see is that you're going to see favorable capital flows for China. And if you do a comparison of their markets, where their interest rates are, where their capital markets, who's doing IPOs, and more you're going to see the internationalization of the renminbi. You're going to see capital flows move in those directions. And those kind of analogous movements have repeated through history. The most important thing is to realize first, cash is a risky asset. I think so many people think if I go to cash, I'm going to be safe because it's much less volatile. But please realize, in this environment of producing a lot more cash, the real returns go down. It's a seductive, risky asset because, let's say, relative to inflation, you might get taxed 2% a year. And as you're taxed 2% a year, that's a huge amount of money over time, but it's a subtle tax. So first, watch that. Think about, okay, currency issue or the value of money issue. Then in terms of that, yes, you want to diversify to storeholds of wealth. The second big thing is diversify well. Diversify well into diversify of asset classes, but diversify of countries, diversify currencies. So think about diversification. If you diversify well, you lower your risk without lowering your expected returns, if you know how to do that well. But I would say, what are the three main things? I don't know. Diversify, I would say. Those would be kind of the main headlines that I'd like to pass. The most important thing of the United States is to do the fundamental things right. The fundamentals, there's so many important fundamentals, but let me go through the important ones. Are you going to earn more than you spend so that you're going to build, we as a country, Are we going to earn more than we spend so that we build our balance sheets? That's important for every individual, for every company, for every organization, and for every government, wherever we are in relation to China or any place, is going to be dependent on how we are with ourselves to do those fundamental things correctly. The future will be very different than your past. If you take every decade, the 1920s, the 30s were the opposite. 1930s, the 40s were the opposite, more opposite than similar. And you take every decade, and it's more opposites than similar. So open the mind to that. Strong character, well-educated, those are the things at the end of the day that will serve you well. The biggest issue is be radically open-minded. You have to make your own decisions, and you have to make them well by taking in well, not by being closed-minded, and having the character to do it, and then going back and understanding histories and how the patterns of histories, and then take in from the people around you, the smartest people you know, the information and triangulate with them well to make that decision. That is, I would say, the overarching at any time, the most important things anybody could do. As for now, I would say to realize that these changes take a global view, make comparisons of countries, put things in perspective. And then if I narrow down to investing, so I'm getting more specific in answering your question, it would be first to realize that cash is not a safe investment. It's a very risky investment, and know how to diversify well. And when I mean diversify well, I mean diversify globally, in countries, in markets, and in currencies. Digital currencies, let me break them down into two types. There's the type in which it's like a Bitcoin type of currency that'll be an alternative currency in terms of its supply, demand, and an alternative storehold of wealth. And then there's digital currencies. That means there'll be other types of currencies, let's say the dollar or the euro or the Chinese renminbi, that is digitalized. Okay, I think we're going to see a lot more of that second type, but I think that there are three main problems of the first type, the Bitcoin type of that. Theoretically, it's good, but the three basic things are a currency has to be an effective medium of exchange, storehold of wealth, and the governments want to control it. So I today can't take my Bitcoin yet and go buy things easily with it. And as a storehold of wealth, it's so volatile that its volatility based on speculation is so much greater that it's not an effective storehold of wealth. And which is also one of the reasons it's a problem to be a transaction vehicle, because if a vendor says I'm going to get paid in Bitcoin and they don't know what that means in terms of their other liabilities, that's a problem. And then thirdly, governments won't, and if it becomes material, governments won't allow it. I mean, they'll outlaw it, and they'll use whatever teeth they have to enforce that. They would say, okay, you can't transact in Bitcoin, you can't have a Bitcoin. So then you have to sort of be almost like, is it a felony? And I'm going to have to be a felon in order to transact. They outlawed gold. What's wrong with gold? But gold was a storehold of wealth. And so if I was to say, would I prefer Bitcoin to gold? No, I wouldn't prefer Bitcoin to gold. Gold will be the vehicle. There's either that central banks and countries use as an alternative to the regular cash, because each central bank can print cash, but through time, when countries dealt with each other, they used gold because they didn't have to worry about being devalued by some country that's going to print the gold. And so it still is our third largest reserves, if you take central bank reserves. The largest is the dollar, the second largest is euros, and the third largest is gold. So, so if I'm dealing with classic currencies, I'm really started getting into the storeholder wealth domain. That also includes stocks in that storeholder wealth. But I don't think digital currencies will succeed in the way people hope they would for those reasons.